Yo, what's going on, boys? Today we're going to be going over a USD JPY trade. This is going to be a trade I took on the 5-minute time frame. I took this as a short position. I'm going to show you guys why I took this position, why it aligned with my rules, my strategy, quick understanding of my strategy as well if there's anyone new here. And yeah, that's pretty much it. So let's just hop into it. All right, boys, here we are on the chart here. This is the position that I have taken right here. Now this position, I had a lot of other reasons that I was shorting within this market right here, right? There's some, in-depth reasons that I don't, put on YouTube. It's some, confluences that I use to help me get a better understanding, better grasp of the market and where price is chasing towards. But internally, right, we're bearish, right? We're looking for sells, okay? So the core entry model of my strategy is we want to see a supply zone like this, okay? And how we mark that out is we get our first bullish candle before a supply zone comes in. We draw that zone with an accuracy zone, okay? What I mean by that is normally you draw your, like if you're drawing it as a normal order block, you draw it from the bottom of this wick up, right? Not me, I use, if this wick is below this next, bearish candle, that's our supply zone, then I will use the actual body of the candle instead of the wick, okay? So, just a little side note there, I will use that and then I'll draw it to this top of this wick. It is a pretty big zone, but there's more in-depth reason that, this move right here, price was already having a liquidity manipulative type of move already to the left, right? So we stopped out all these orders to the left. So I wasn't too worried about, this zone. This really wasn't where just selling pressure came in. This was more of already a manipulative type of move to take out orders here to the left. So I wasn't too worried about this zone being too big. My main concern was price manipulatively took this liquidity to the left and price started trending down. Now internally we're trending down, right? And we put in a new low. Price comes up, puts an internal lower high, and then we continue down and we do end up taking out that low right there, right? So we want price to take out that main low to consider this valid level of liquidity, right? So after it does that, this trade's on the table, right? This trade's 100% on the table. Again, there's some outside, other confluences I use with the strategy as well. But for the core understanding of it on the 5-minute time frame, right? We got that break of candle, right? And price is now trending down. So we have this internal high right here. There's liquidity resting above this high because this is an internal lower high, okay? Price is continuing down, right? We have sell stops resting above here, okay? Or buy stops, resting above here, okay? So liquidity is resting above there, right? Price comes down, puts in a lower low, and what does price start doing? Well, price starts rallying up, okay? Price starts rallying up, and what's my main concern? Well, I know this wick was already kind of a manipulative type of move to stop out these orders to the left, right? So I'm not too worried about this zone being big. My main concern is this is our next level of liquidity. I want to see price take that very quickly in a manipulative type of manner and to tap into our supply zone, right? And that's essentially exactly what it does. Now, what's interesting with this trade is this candle opened at an 8 a.m. candle, okay? So when we have a new hourly candle, it usually can bring in a lot of volume. Essentially, what happened was when this candle first opened up right here, right? We never actually had a bottom wick, okay? We never put in a bottom wick, and I know this because I was watching it live. Price came up, took this liquidity super hard, and we instantly got a very, very, very fast rejection. And when that rejection was coming in, I decided after, a nice wick like this, we clearly manipulated this level to the left. This is a new 1-hour candle. We don't have a bottom wick yet. We know this is a very volatile candle, and we know we can bring in a lot of volume after, this 1-hour opening here. So we did the move that we needed to see. We got that manipulative take of liquidity there to our left. We tapped into our supply zone. Another thing is this supply zone can't be tapped. It was never previously tapped after, this supply zone coming down. Price came up, made that liquidity in front of that supply zone, but we never actually tapped that zone. So we want to see that sweep of that liquidity, and then after we sweep that liquidity, we want to see that reaction off that order block to the left, supply zone, whatever you want to call it, same thing. And that's essentially exactly what we saw. We tapped into this supply zone, we got that rejection, and after coming down with it with so much momentum, I was able to take a flip entry. So that is where I got in on this trade. I will pop up proof somewhere on this video, of course, that I took this trade. And took this trade. It happened very, very, very quickly. Not a lot of people actually caught this trade, but took this trade, shorted the market. You could have entered flip again, or you could have entered break of candle. I was entering on 2 accounts, and obviously, like, I'm not like copy trading or anything. I don't have like a software, so I wasn't able to get the exact same entry. One was more of like break of candle, one was like candle flip. It was kind of rough there, but we got that entry, and we wanted to target lower. Now, exactly where I was targeting lower, that's more of kind of some advanced stuff that I don't like to put on YouTube, but there was reasons for price to target lower. But realistically, overall, we actually had news, orange folder news, which isn't red folder, right? But we had orange folder news that I felt as if it may impact UJ a little bit at 10 a.m., which was, just 30 minutes after 9:30 right here, 30 minutes after New York Open. And, I wasn't too confident holding for a massive risk reward. I just wanted my quick scalp. This ended up hitting for about 2 to 3%, depending on, which account. And trade management wise, entered this trade, and, this was 5 minutes. We were already halfway to our TP. And this next candle almost hit my TP. Now, what happened? Well, I was originally targeting a slightly lower level, just literally just right around here, okay? So slightly targeting a lower level. It actually matches up with a low, like on the hourly time frame as well. But I was essentially targeting lower level. And why did I close slightly early? Well, because what started happening was price pushed down. We had 2 candles that we literally failed to take out these lows, right? So we found support internally, right, on this 5-minute time frame. We found support once, twice, 3 times, 4 times now, okay? What does price do again? Comes down, finds support there again, now 6 times, right? So what is this level showing? Well, this isn't gonna be like, oh, this is, holy grail support level in the 5-minute time frame. I need to close my trade, it's gonna reverse. No. But what it is saying is what price is essentially doing right here is generating liquidity under these lows, okay? Now, price could take out these lows and keep taking out lows, right? I don't know if that's what's gonna happen, but I can react to what price is showing me, and price is showing me that it's generating liquidity right here. So price could technically, and I don't want to be caught up in this, price could technically, if it wanted to, sweep out that level of liquidity and start pushing up, maybe come back to break even, and it could continue down, right? That I am not willing to risk for literally 0.1% of my account or 0.2% of my account. I was sitting here targeting lower levels, and I was like, well, we're creating such nice structured TP, such nice structured liquidity right here. I'm gonna set my TP right under it, so when we do have that manipulative, liquidity sweep, and if we do end up start pushing for higher prices, I'm not gonna, get edged on my TP by like literally 0.1, 0.2%. So moved it just slightly up, and again, got filled. Price did end up pushing for lower prices though. So this was, again, on a higher time frame. I felt like UJ was starting to lose its, bullish momentum as well. So, that's another reason I was kind of looking for short positions, but nothing there was 100%, valid yet. So I had to be very kind of, picky on my setups, picky on my TPs, because, we're not 100% in a full-on bearish trend by any means. So it's not like I can just always extend these TPs and price is just 100% gonna run to it, I have to just react to what price is showing me. And I was targeting, this low down here. Price was showing me, hey, generating a lot of liquidity here. I knew that sometimes we would take that liquidity manipulatively and run in the opposite direction. So I was like, cool, I'm just gonna, slide my TP up just a little bit, just so, I don't, I'm not, reaching down here and price comes down to manipulatively take out these lows and we start pushing higher, not be a happy camper there. So I decided to move my TP right there, caught that for like 2.7. Again, it depends on each account, slightly different on each account. But yeah, that's kind of the core understanding of that trade. If I, kind of draw this strategy out for you guys real quick, it's, if we're in a bullish or bearish market, right? Say we're in a bearish market, we want price to internally be trending down. and we want price will consistently target these levels of liquidity and, you know, deliberately, algorithmically take them out to then continue the overall trend, right? And that's right there essentially is where, you know, normal supply and demand people, they get stopped out. People trailing their stop losses for lower internal highs, they get stopped out, right? So it puts a lot of liquidity into the market, right, for price to then go take. And if we get our valid, you know, selling pressure from that level there to the left, which is, you know, an order block, supply zone, whatever, that is where we'll take a short position like that, right? And we'll put our stop loss above that, and we will target, you know, pretty much internal lows. So that's pretty much that. You know, that's kind of a core understanding of that strategy. You know, I just wanted to quick do an overview of this trade, how I managed this trade, why I moved my TP slightly up. You know, it really wasn't even that big of a difference. But yeah, that's pretty much it for this one. If you guys have any questions, if you think I should have done anything differently, just let me know. If you guys want to see more of this, more trade recaps like this, you know, again, just comment, let me know, subscribe. I appreciate you guys for watching, and I will see you guys on the next one. Peace.